Hey, coach, I can't hear you.
How about now?
Yep, there we go.
Okay, I hit something on my headset. Okay, see, I'm not a mime. You guys thought I was pantomiming FX. So, did you hear that? Anyway, look, we take life
I
a
can
little.
I can I can
Huh?
already assume, since you're in a good mood, that there was no chance you were short a cable.
Yeah. Oh well, you know what? I actually scalped it yesterday. Like when after that news broke, and I just sold it. I was out in 30 seconds. It reminded me of being on the floor for plus 40. But anyway, this was the position trade that I've been working. The euro also, guys, never did anything wrong all the way up. We talked about it last week down here at 940. Okay, then we talked about this 110 level, 109.80, and here we are. Maybe we're going to get some type of short-term top. And, you know, I noticed I went to Pattern and Plays. Steve's been short the dollar index. Blake and I had a discussion about the bunds being weaker than U.S. 10-year Treasury, and that would favor the euro, and it's starting to manifest. Plus, who knows, all the Fed printing and coming into the repo market has people dollar shy too. So I really don't think anyone that's been listening to us, Steve Blake, over the last week or so would be long any dollar product. I think we've laid out a lot of good technical cases, fundamental cases. So uh, I just want to make sure that people realize that what we're doing here is if if not to put you on the right side of things, and we're not always right, but to keep you from being on the wrong side of things with the majority. So finally, the DSI is starting to come off in the dollar index from the upper 70s, and people are starting to see the other side of the market. So, that's really one more thing I just want to cover here, Blake. And I've been thinking about all of us. We've all kind of thrown in the towel, at least short term, for a top in the S and P's, myself included. It's hard not to think that we could make new all-time highs in the S and P's here. But I have a little three drive formation working here. We could get up to where is this 3010-ish or so. But I think because of that, it's worth a shot. And everything's a shot in this business. To attempt short positions, I have a piece on, and I would take an add-on up here if we get up here. That's a problem in trading. If you just wait for one price and it doesn't achieve it, and then we break, you're not there. So I know Steve trades this way, Blake trades this way. You just put a piece on, makes you pay attention, and if it's not a perfect entry, at least you're there with something. So if we got to 3010, I would I'd add up here. And of course, my line in the sand would be if everyone's right and we make new highs over 30 and a quarter. So that's a risk. You're going to know it's starting to do something wrong. If we start trading back under this 2960, you might even know a little sooner under 2980. So anyway, taking a shot in the S&P is up here, and we'll see. New highs, I'm wrong. But I just, everyone's waiting for 30, 50, 30, 60. I don't know how long. And they've been right to wait, although waiting for that number, if you recall, certainly didn't work here. Didn't work here, right? People are looking for 30, 50, 30, 60 back here. So they're still waiting. And maybe it doesn't happen. So with that being said, everyone at investing.com, I'm not trying to freak you out, but this is this could be a good area to buy insurance, raise a little cash, even in your IRA. just in case anything can happen. There are a lot of this is more of a geo thing going on, and the market's ignoring a lot of things. And we go, oh, how resilient, how resilient. And we were talking about it up here, how resilient the market is with impeachment, with what's happening in Syria, uh, what's happening with trade wars. And then all of a sudden, markets will get to a tipping point, and then it all happens at once. So um, that's about all I have to say, except that if you haven't done it yet, become part of our trading community. Okay. And this is the best team I've ever been part of. And so, here's some of the active patterns in play. Andre is short the dollar. Look, Greg is short Swiss. I have to tell Greg to stop copying my trades. Anyway, that's what I have for today. We have a great guest. If you're a precious metal person, Michelle Schneider is with us, and Michelle's a former COMEX trader. She was a member of all the commodity exchanges in New York, along with her husband, Keith. That's where she met him. And she was very bullish silver in our last interview, and we all know what it did. It accelerated to the upside. And I want to know what she's thinking now, since it's become a little bit more two-way. So stick around at the top of the hour for Michelle.
I'm assuming it's just starting, Coach.
What is?
Silver. I may remind you, silver has been at 50 twice in the past.
Yeah.
I fail to see how in the not so distant future we won't see that number print again. My personal point of view.
The Super Bowls are talking 3 figures on silver next time.
Oh, eventually.
Do you think that's possible? Like
eventually there is no question about it in my mind.
$150 or so.
Listen, eventually there is almost no question in my mind, because we know that the path it has been money debasement, right? And things that have tangible value will always, at an extent, maintain their original value, right? So, but if we want to talk about 3 digits in silver, might be decades from today. So, no reason to have this.
Steve, what's even more precious than the shiny stuff, the metals that has eternal value? It's the relationships you have with people, working with people that you respect and have fun working with. I'm grateful to be in that situation now, but and you can't eat gold, but you'll certainly be able to perhaps buy a couple TV dinners with junk silver. And I'm interested in what Blake is. I want to see Blake's charts and see if he had anything near the highs here in euro. But I just want to say one more time, guys, this is the best place that I've ever been. Okay, and I've been around for a while. You saw my picture. I have age being in this business. I'm 39, but it's the best place I've ever been part of, and the reason's right here. Okay, great lineup of people with talent, and what's even I think more valuable? Everyone in here understands how difficult it is for people to pull money out of a volatile and sometimes very tricky market, and they all are rooting for you and they all have a heart for people. So it's not like we want revolving doors. Let's just get a membership and see how long they last. So if you don't believe me, just take a trial for $1 and go check out our private members chat, and you'll see that I'm not BSing you. So Blake, what's the story here, buddy?
Hey, good morning, Coach.
Good morning, bro.
What's happening?
The guy in the shades right here.
It's there's been a lot of volatility this morning. I woke up to some pretty big moves in the currency market. Now the pound's getting crushed. It looks like the DUP they're standing by their stance that they're not going to be supporting this Brexit deal come this weekend. So there's a parliamentary vote. That's like the big deal. And right now, so are we going to get it? Are we not going to get it? I don't know.
Wow.
But this is the cable and what's happening right now.
So much could happen when I'm talking nonsense. Wow,
Well,
I didn't see that candle.
but yeah, we're seeing a pretty big drop off in the pound, and now there again the vote is for this weekend, and so there's going to be some gaps probably over the weekend. That would be my assumption. If the vote doesn't pass, Amanda thinks there's going to be a general election, a no confidence vote, and possibly, we might see a hard Brexit. I mean, that's the reality. Now, I don't want to get, I don't want to get, was it the cart before the horse? Put the cart before the horse. Jump on my cart while it's in front of the horse. I'm not sure what I want to do here regarding the cable, but I think you got to be a little careful with the pound, especially with the move that we've seen the last couple of days. And we rallied to the 78% retracement right here above 129, 161% extension. We overshot it, and we're coming down. Now, you had mentioned, Coach, that we don't want to be long any dollars. That's actually an incorrect statement. I am long dollars right now. Now, when you're talking about the euro, no, I've been very bullish the euro going into this major.
I knew you'd have a line up there. 'Cause I saw it
Major,
rejected.
yeah, it's the major. Our lines haven't changed.
Yeah.
It's the descending wedge.
Yeah.
Resistance comes in at 111.30, and we hit it today. 111.30, 111.35. I mean, we hit it to a T. I had some long euro exposure, got out of that this morning.
Nice.
Not too far away from where we're at, like at 111.15. But I think you got to be a little careful right here. Now, I am long the dollar, but not against any European currencies because look,
Commodity currencies.
I'm trying to be an optimist. I'm trying to, take the road that the deal's going to get done. But just in case it doesn't, I'm actually long dollar Mexican peso, and I have my average is like at 1925 right now because I've been buying as it crossed through the 200-day moving average. I started buying it around 27, and I picked up more at 18 last night, or not last night, yesterday day, and we hit the 78% retracement, but also really, really big triangle support. So I'm long dollar Mexican peso here, and I expect a rally. But the flip side to that is if it does break down, it's going to break down. If we get some risk aversion, like the market looks like we're seeing a little bit of risk aversion, we might actually see, the dollar Mexican peso rally from here. But if you take what I just said, I'm very bullish the euro, and I'm bearish the peso. The pair to really be long is the euro Mexican peso, and I'm not right now. But I think this is, if you look at the support here, this is major support. And if you guys are, equity market bears, this is probably the best currency proxy risk reward to be long right now is the euro Mexican peso. Instead, I'm long the dollar Mexican peso, which is, and I'm long euro New Zealand. So I guess I'm in essence long the euro Mexican peso to some extent, way, shape, or form. But the fact of the matter is, I like the risk reward down here. I like the dollar Mexican peso long down here. I would feel a little bit better if we're above this channel resistance, which would be 1925 now. I was a little early. Sometimes that happens to me. I get into a trade a little earlier than I really want to, but that's okay. It's I build positions a lot of times if I'm pretty adamant about the trade that I want to be in, I'll start building a core position. That means I will add on to losers, but I know ultimately my stop is a hard stop, and it is a hard stop below 1910 right now, for me personally. But I'm more upset with myself that I have to pay this ridiculous carry costs where I could have been buying this overnight and not had paid my overnight interest that I have for the last couple of days. But because I do take some pretty sizable positions, so for me the carry costs are in the thousands of dollars on a couple of day basis based on the size that I trade. So anyway, um I am looking for a reversal here, and you're seeing, man, this pound is just getting crushed right now. You got to be careful with this. Look at this daily candle on the cable. That's relatively ugly, and I think a move back below 127.50 would be quite bearish. Hold on really quick. Let me I need to turn down my office speakers a little. Um, but anyway, just some food for thought. The pound's had a nice move. I'm really going to be decisively more bearish or bullish the cable come Monday. Obviously, if a Brexit deal is done, the cable's going to probably 135 to 140. I would think that we are moving up into this area after the weekend. We may gap higher above 130, and then we're eventually going here. So if you guys really want to know how I feel about the cable, ask me on Monday, and I'll let you know how bullish or bearish I am come Sunday night, Monday morning. Because if a deal does get passed, we are going to this area in the pound. Like this is like to me it's a given. And even with a gap up, I'll trade a gap up, and I'll trade it on the long side. But if it's a no deal, the risk is the pound might give back some of these gains, like big time. We could see the pound dollar come right back down to the 122, 123, 124 range. So I don't think that this is out of the realm of possibilities either with a no deal, because then we're gonna have to go into a general election, and then are we going to have a new prime minister? Are they going to have another referendum? I mean, there's all these questions. So frankly, and I want to listen to Stelios's comments here in 1 second, because he said something in our private chat room, in the Forex Analytics private chat. He said a Brexit deal is going to pass in Parliament eventually. So, Stelios, where you at?
Hey, how you
Now,
doing?
define eventually.
Hey,
Define that.
I can't.
Did you guys put a bar in the
This
members
century.
lounge?
What did I put a bar in the what?
In the members lounge.
Oh, and yeah, we should have one. I think a lot of the Europeans would be drunk off their. But for me, it's 5 o'clock in the morning. Hell, I might actually. It's 5 p.m. somewhere. So
Oh yeah, a breakfast beer. Ever have one?
I can say that I have.
Okay, I thought so. Okay,
I can honestly say that I have. Okay, so Stelios,
Okay.
what do you mean by all that?
It's obviously getting a bit hectic now, and we had, like you said, we had an agreement, or at least a preliminary agreement between the UK and the EU. We still need to pass that through Parliament, and the big problem at the moment is the fact that Boris Johnson does not have a majority, and without the DUP, who have actually said just a little bit earlier that not only are they not going to abstain, they're actually going to vote it down. So that's a big hurdle to overcome. And we know that on the other side, the Labour Party, they've said, Corbyn has said that, look, anybody who votes for this deal is not going to be an MP again. So this is a pretty big incentive for people to toe the line. Now, I said in the chat room that I think eventually this whole thing somehow is going to get resolved with some kind of agreement. Will there be another extension first? I don't know. I think it's actually likely, because we're only 2 weeks away, less than 2 weeks away, and there's a lot of stuff that needs to be done. And so
by 2042, we could get this done.
Yeah, we'll be retired and everything. But unfortunately, what I think should be happening is the UK should be leaving the EU, because that's what people voted for. That's the right thing, in my opinion. I don't say Brexit is right or wrong, but that's what the people voted for. So that's what should be happening, but it isn't. We've had one extension already, and we may have another, or we may have some kind of a deal. Unfortunately, the way I see it, and I'm putting my cynical hat again today, we are dealing with politicians. They're very well known to change their minds and to look after their own interests often. So I think eventually, I still remember this view. Eventually, there will be some kind of a deal. So it will be Brexit, but really only in name. There will be agreements about trade, about movement of people, movement of capital, all that, and unfortunately, I think this is what's going to happen. And I'm saying unfortunately because, again, I think the right thing would be to follow what people voted for. So that's my view. And I think we still have a long way to go. And the market's obviously very, very shaky and very nervous because you have rallies and they'll sell also because we have tape bombs all the time. So let's wait and see what happens at the Saturday vote. The DUP have said they're not going to vote it. They were going to vote it down. So the way it looks, it's not going to pass. What happens after that? Well, we've been in this situation, how many? 6 times with Theresa May. So in my opinion, the more time passes, and even if we get another extension, I think that's going to be very positive. Because if you get another extension, then the whole thing changes, in my opinion, because then they're going to fight again to get something done. That's the only reason why there's going to be another extension, is not to extend for another 6 months and then do a hard Brexit. I think the reason why this is happening and why we might have another extension is to actually finally somehow convince everybody to get together and vote through a deal. That's my opinion. I could be wrong. I've been wrong in the past, but just my feeling, and I've had this feeling from day one. So.
Okay, well, I kind of hope that they do an extension, because it's set to ruin my Halloween festivities on October 31st, if not the case. And I really like to go trick or treating. My kids only have a couple of years left before they are done trick or treating with me. So
plus you have a very cool costume.
yeah. This is my Halloween. This is our big deal here. No, but in all actuality, it's definitely volatile out there, and it's you think about like where the cable's gone just in the last week and a half. We've gone from 122 to 130. We've had an 800 pip rally, just a rip higher. Some consolidation, above 127. I don't really think you're going to get much below 127 on this dip. I think that there's a lot of optimism going into this weekend, despite a lot of the comments from the DUP. Did really, as you pointed out, Stelios, and Steve would probably agree, that you have politicians that may bend. They may, they may come together. The move has been very swift. It's caught a lot of people off guard. I really doubt that we're going to get too much of a pullback at this point. But come Sunday morning or Sunday afternoon, Sunday evening, when the FX markets open, we could be singing a much different tune. And I think that if I was going to go, I'm just going to, I'm stating for myself, I'm not going to have any cable exposure going into this weekend. I'm just not. I don't think the risk reward is there. I mean, if we were trading, a lot lower or maybe a lot higher, I might be willing to take a pop shot at the cable. It's, for one reason or another, but I'm not at this stage. Now, Dale, you talked about like the S&P. Yeah, we're up right around 3,000. It's a pretty big resistance. I think while we're below 3020, you gotta be a little careful. I posted in our Forex Analytics chat room last night. It was really interesting survey amongst asset managers, hedge fund managers from Bank of America, that the event that's like one of the big events that's less likely to affect stock market at this point in time is Brexit. And I do feel even if Brexit passes and we see the UK have just they come together for a deal over the weekend, I think the gains for the S&P are pretty much limited. Now, if you're talking like the DAX, maybe European equity markets, maybe the FTSE or the DAX. I mean, we may have some gains to be had there, especially you look in the FTSE here. I mean, we could really rock and roll a little higher, but as far as
What
as
was
far
that
as-
chart you had before that was making a new high?
Oh, this is a DAX. Yeah. So the German
Okay.
DAX, I mean, we could,
Yeah.
we're at new highs of the year, or we could, or not high. Yeah, I guess we are new highs of the year. I mean, we could really kind of cream higher. But as far as the S&P goes, it's the bullishness has pretty much, in my opinion, run its course. And
How
so
about this, Blake? The weaker dollar takes some of the money flow out of U.S. assets, and that's why some of the EM markets will outperform the U.S. We've been outperforming everyone
100%
forever.
agree. 100% agree with that. It'll reallocate into some of the European markets.
Yeah.
So,
Yeah.
I think the S&P, like I said, the upside is limited. I mean, we could maybe challenge the highs, maybe get just above new highs, but
I'll be crying at new highs.
you might be if you're shorting here.
Yeah.
Maybe the better.
I'm out.
trade
You
is
know what? I'll be out.
Okay. Well, hey, there you go. You got your line in the sand, right?
Yeah, new highs. Everyone thinks we're
Well,
going to have them.
unless we gap above there on Monday.
Yeah,
right?
that could
All right.
happen. Yeah, that's happened to me.
Yeah, it can happen.
In fact, you know what, Blake? One time my birthday's over Memorial Day, and these were the old days, and I was trading euro dollars. It was a rising wedge, not euro currency, euro dollars. And I was scaling in against a wedge line, and I came home, and I'm going to San Diego. I was living in Arizona at the time. And I hear Ron and Sana say on TV when I got home from the office, how much higher will the bonds be on this Fed easing move? So I actually knew that I had blown out my book all weekend before the end of Memorial Day.
Oh, really?
Yeah. So, I mean, there isn't much I haven't experienced.
Wow. That's
Yeah.
that's crazy.
I
sorry.
still had a good time.
I bet you did. I bet it was Memorial Day.
Yeah.
Hey, real quick, we have a lot of data coming out.
Okay, buddy.
We got to watch jobless claims. I'm going to pass it over to Steve here in a second, but watch these claims. They're starting to climb a little higher, and I think this is one of the risks to the jobs picture moving forward. A lot of analysts that I read are starting to look for potentially higher jobless claims moving forward, which is going to really have a negative impact for our personal for the U.S. job market. Just something to keep in mind. We got housing starts, building permits, jobless claims, Philly Fed coming out. So a lot of data points coming out in just a minute. So I'm going to pass it over to my colleague Steve Stelios. Steve, it's all yours. Stelios, it's all yours.
Thank you, Blake.
Good luck today, Blake.
Hey,
Blake.
good luck to you guys, and
Thank you,
thanks
mate.
everybody for tuning in. All right.
Thanks. And by
Taking
the
the screen.
way, I want to answer to Forex Gal. She asked where I live. I live in Athens, in Greece, but I studied and worked in UK for 16, 17 years in total.
A billion years or something.
A billion years ago, yeah.
Hey guys, after I told that story about Memorial Day, I kind of realized I sound like my grandfather. You know how grandfathers, back in the war. And everyone just, there goes grandfather
God,
again
with
the war story.
We're going to hear the war stories again. Yes, I know exactly what you mean.
Okay.
That was, trading's like being in a war.
Let's see.
Any second now.
Housing
Jobless
starts
claims.
weaker. Jobless claims exactly as expected.
Building permits stronger. Let's see Philly Fed. Do we have Philly Fed?
Doesn't seem like it. Where is it? Why isn't
Like being at the
Canadian manufacturing sales, by the way, also stronger, 0.8 versus 0.6. Okay, Steli, I'm going to switch to the charts and have a look. If we do get Philly Fed, let me know.
Sure.
Okay.
Okay.
So let's see. Not much of a reaction initially. I mean, jobless claims were, as expected. Let's see if we got anything. Nah, we didn't. Housing starts, as I said, weaker, but not that much weaker. Building permits offsets that in some extent. Let's have a look at what's happening with USD CAD, because we also had Canadian data as well. So let's see. USD CAD, there it is, still plunging. Yeah, USD CAD still plunging. Be very careful here. If you remember, I've indicated multiple times the importance of this blue trend line in USD CAD. 2+ year ascending channel. We're now getting very, very close to it. I mean, previous low here at 130, 130 is also more or less the level. at which we have this channel support passing. So USD CAD very, very close to major support. So if you really like it to the upside, this is the place you should be, buying it. But personally, I'm not going to be doing so. USD Swiss plunging in even further. I had warned about it. I actually even did.
Steve, by the way, sorry to interrupt. 5.6 Philly Fed, so less than expected. I just saw it come through on Twitter. Yeah, there
for
you go.
some reason we haven't had it.
What were they looking for, Stel?
7 point something I have on my calendar.
Wow.
Yeah, and keep in mind, Dale, that the previous was 12.
12, so it's a big drop.
Especially, as it seems, it's in a big downtrend at the moment. As all manufacturing data. So look at the USD Swiss getting disintegrated here. I even posted an intraday update a few hours ago, and I posted in the chat room because I was expecting this breakdown for so long, and it felt like it never happened, but it finally did. And as it seems, it's accelerating and it's been helped. If you have a look here, you'll see that the USD Swiss is moving faster to the downside than the Euro USD is to the upside, because we also had a nice intraday reversal lower in the Euro Swiss. So that really affects the speed at which.
Good point.
Yeah, the speed at which the Euro, the USD Swiss has been dropping. Perhaps we have something like this here we might want to consider.
Andre Paul's girlfriend's in Athens right now. Too bad you guys are married.
Say again?
Andre, one of our attendees, said that his girlfriend is in Athens right now.
Too bad we're married, because otherwise your suggestion would be go find
maybe Andre for a membership might give out her phone number for a free subscription. Andre, would you do that? I want to see how much you love her. All right, go ahead, Steve. Grandpa's gonna shut up for a while, okay?
That was a good one. Okay, so USD Swiss, very nice breakdown. So this is, one I'm very closely monitoring here, and something. I know it's not very popular, but if we want to start by talking, what has developed some, important moves, I have to tell you that EuroNOK is probably on top of my list. And if I zoom out, you can see why. Because we've had a major development in EuroNOK, and quite an impressive one. I mean, just look at the momentum of this breakout, right? So we have had this ascending wedge, which dates back to 2014. So, something, and, that's resistance, because if we want to take into account the trend line support, that dates all the way back to 2012. So, we punched through it yesterday, and you can see that, this happened with an impressive momentum to the upside. So I have to tell you, that was a decisive area in the market, and we've bridged it, and it seems that we have momentum, and I think EuroNOK should be heading higher from here. Look at the same time, we also had a breakout in this RSI trend line as well. So I do think that EuroNOK, quite an important move here. Cable, we made it to 130. I mean, almost a few pips away from it. If you remember, several days ago with Stelios, we were saying that, be careful being short the cable, because, we can easily make it up to 130 within a few days. And there it is. We did it today. Somebody can say very, very nasty daily candle. And somebody else can also pinpoint here that if we close negative on the day, equality target from first leg higher to second leg higher, will have been held on a daily closing basis, because we held it yesterday. And if we close lower on the day to day or unchanged, we're going to hold it once again today. Personally, though, I do believe that as long as we remain above this descending wedges resistance, which is very, very likely it's going to act as support, currently passing from 126 50 to 126.60, I do think that there is more upside. So obviously, such a huge move higher might need to somewhat correct lower. So I wouldn't be surprised if we see lower prices from here. I mean, definitely on the daily, we do have a nasty candle, but do I think that, that's it? Do I think that we just, knocked people out of the short positions and now the market is going to continue to new lows? No, I actually don't. I still think that there is most likely the cable should be bought on pullbacks and on dips, and trying to do so at 126.50 is not going to be a bad idea. That's what I think. Now, having to do with major technical developments, I also have to focus on another pound pair, and that will have to be the pound Aussie. The reason being, those of you that are frequently here, you've seen this expanding triangle, megaphone formation, you can call it as you wish. It's been on my chart since, I don't know, definitely 2018. I don't remember exactly when in 2018. And look at where the pound Aussie got rejected once again after retesting this expanding triangle's trendline resistance. And look at what has followed since. I mean, if we do close more or less like this on the daily, we will have registered here a very nasty evening star formation. So we're currently back testing horizontal support resistance area and back testing this broken ascending channels resistance and support. But I have to say that I can't discount the rejection because it came from the area that it came from, right? And as long as we stay within this expanding triangle, there is in essence no trend. Now, pound Kiwi also got rejected from the projection of the previous channel. We had a like little move out of it. But keep in mind that this also remains in an ascending channel. Now, as you see, it is ascending, so somebody can say, okay, so this is an uptrend. Yes, but on the other hand, just compare the inclination of this ascending channel and the way price action has been, happening with the move that we had lower. So I still find it quite hard to approach this move higher, which over time it has been slow, overlapping, and choppy, as impulsive, right? Now, don't forget, this is a cross trade with the Kiwi, so it doesn't mean that the pound has to collapse if this is to continue eventually lower. I mean, we might just have something happening and Aussie and Kiwi overperforming the pound for some reason. Anyhow, bottom line, both of them got rejected from key resistance areas, especially pound Aussie, as I showed you. I mean, that was a major area. So that was one more I wanted to show. USD CAD, we already went through it. Keep in mind, we're just 30 pips away from hugely important area for the market. I also wanted to show, because I forgot to do so yesterday, CAD yen, because CAD yen, we had shown this descending trend line some time ago. We bridged through it, also now gone through the previous high in the 200 daily moving average. So keep in mind, CAD yen has already made a move here, and I have to say that I think that if you want to be constructive here, it makes sense against this trend line resistance, which if we come back to retest, it might act as support. Now, one more USD SEK, I showed this last week on the webinar, actually, when we had this one-day reversal lower. I said that, listen, very nice reversal after a little overthrow from this ascending wedge. So keep in mind, this might be pointing to further weakness, and this is what we're getting. Today tested this 968 horizontal support resistance area, and it still has room to move before it even tests the ascending wedge support. Keep in mind that USD SEK is, inversely correlated and with a very high correlation to the Euro USD. So that is also another indication that, along with the fact that USD Swiss just today seems to be breaking out, another indication that Euro USD, let's have a look at it here. There it is. Might have more upside, right? 111.10, important resistance area. Let's see if we're going to close above it today or not. We're currently exactly on that resistance. And as I wrote, some hours ago in the chat room, above that, we then have 112.20. You see the 200 daily moving average is at 112.10. The descending wedges trend line resistance passes from 112.20. So that's the next area of resistance I'm looking at. Now, I had a pattern in play. Those of you that are members Forex Analytics, you know that. Short the DXY. I established that once we broke lower from this intermittent ascending trend line support. Today that closed hitting the target at 97.70. Now, of course, the pattern in play is now closed, having hit the target. I still have 2/3 of my position. I closed just 1/3, and depends on how we close today. I might decide to take even a little bit more profit. Let's say take down my position to 50%. So first target hit here in the DXY, but I do still believe that there is a decent chance that we can make it to retest the ascending channel support, which currently passes from, 96.65. So I don't really think that we found the low in the DXY. I think that even if this is a corrective move lower, we can still easily move lower towards this channel support. RSI also gives me positive signs for continuation lower. I mean, we've now breached through the 40 level as well. We're seeing daily RSI at lows we haven't seen since June. So yeah, why not? I think it looks safe to say that selling this rebound might be the prudent thing to do. Now, we were mentioning yesterday how difficult it is to be long the Aussie and the Kiwi because they they remain bearish since they haven't managed to break through any real resistance. Today, the Aussie has had a nice big move higher, this time attempting to break through this purple triangle. And if it does, that's going to be quite a bullish signal in the short term, because in order for something to really start happening here, I need to see this blue descending channel break to the upside. Okay, I'm assuming that until we make it there, 200 daily moving average and the channel resistance might have also converged to the 61.8 at 69.30. So first step forward for the Aussie, but it definitely has more that it has to do before it proves that something is really moving there. Same deal with the Kiwi. Kiwi, might be trying to base here, but I would definitely need to see a break above 64.25 before I can say, okay, we finally breached through an important area of resistance, so we might start squeezing short positions. Until that happens, I think there are better places to be having to do with the markets. Okay, now Aussie yen, Kiwi yen, not much has changed since yesterday. Keep in mind, Kiwi yen 69.30, quite an important resistance area. We're not far away from that, but we're still below it. So for the time being, euro and pound until a few hours ago seem to be performing better than the commodity currencies. Today they seem to be getting a bid. Let's see if that can last, because it's evidence is, is not there yet to suggest something like that. I mean, and a temporary move higher is, is not enough. I want to see more, and I want to see some resistances being taken out, before I even consider that. Now, let's see. Let's go through your questions and see what you want to know. I cannot hear anything. Yeah. Dale didn't have sound for the first like 30 seconds, but that's fixed. All pairs of euro are chopping this time. I'm not very sure. I mean, the euro has had a nice recovery higher. So during the past, let's say 2-3 weeks, the euro has steadily attempted to move higher. Euro pound until today has had, a very nice move lower. Now, having to do, if you're talking about, Euro Aussie, there you go, Euro Aussie. Yes, in that case, I would tend to agree. By the way, keep an eye, since we mentioned it, keep an eye on this potential ascending wedge here, and keep in mind that all this is taking place within a larger ascending wedge. You can see it here. There you go. So I would find it quite interesting if we, break through this initial blue wedge, and especially if we make it lower and we bridge through the 161.30 confluence of supports. Okay, so Euro Aussie might be trying to, make something happen here. Now, Euro Kiwi, on the other hand, broke higher after a long period of time from this symmetrical triangle, currently pulling back to retest the breakout trend line, question mark. We'll find out if that's the case, because there is always a chance that you see some type of a false break higher, but we need to see how it's going to react from here. Okay, so Euro Kiwi, important to see what's going to happen by retesting this trend line. And Euros is currently on support, so let's see what's going to happen. We might have more to talk about these two pairs within the next couple of days. I mean, we have today, which has a lot left in the day. Tomorrow, Friday, up to Monday, I'm assuming that we should get more evidence of what they want to really be doing. Lots of economic news this morning. Yes, we already covered those. They like breakfast. Could you say where does Stelios live? Yeah, he lives in Athens. He used to live in London for many years. DAX ripped up and has given it all back. FTSE rip countered by pound rip. Yes, that is a very good point, Nick. A lot of people don't realize that, but keep in mind that the vast majority of investors, for example, in the FTSE, which is, for the few of you that might not know, is the UK stock market. A lot of people might be saying, we've had so many developments in the Brexit front and the FTSE hasn't been doing much. That's not exactly the case. And I'm saying that that's not exactly the case because keep in mind that if you're a foreign investor and you've invested in the FTSE, with the cable move we've seen from 122 to 120 to 130 in essence, right, temporarily, you've already had a very, very nice move higher in the value of your investment through the appreciation of the cable. So the FTSE seems to have stalled here, but if you're a foreign investor, which, more than enough of those, you're definitely in the money, right, due to the pound move. So yes, if you are a local investor and you invested in pounds initially, yes, you haven't seen much of a profit, but that's not the case with foreign investors. So yes, the move that we would have seen higher in the FTSE has been counteracted by the move higher in the cable, and that is why we're seeing these divergence with the DAX. Not that the euro hasn't been performing well, to be honest about it, and keep in mind that the DAX has also now broken above this descending trend line resistance. So that is quite an interesting development in the DAX, which might be pointing to new highs. One thing is for sure, you should consider this 12,470 area as support in case we come back and retest it. I think that might be worth buying, right? Now, having to do with US stocks, I hate to repeat myself every single day, but what I've been saying since last week, remains the same, right? Above 2960, you might want to have a little bit of a bullish bias, especially given the long-term trend. But all in all, as it seems, we're currently trapped in an ascending wedge. Now, does this mean that this is going to be resolved to the downside? No, not necessarily. I mean, take the recent example I showed you, like, what was it, like 10, 15 minutes ago? What happened with Euronoc? Euronoc was also in an ascending wedge, had been there for several years, and yesterday it broke to the upside. And just to give you some technical guidance, wedges are beautiful formations to trade, and in my opinion, probably the most profitable technical formations to trade. Have a very, very, very high probability of working out. But if you're looking for a wedge to break the downside, you need to have the kind of wedge that points to an unsustainable move. And wedges with this kind of resistance inclination are not that kind of a wedge. That doesn't mean that this cannot break to the downside. It definitely can. But what I'm saying here is the following. Let me draw something for you. So let's say you have this kind of a wedge. You can easily end up breaking to the upside. Okay. If we had this kind of a wedge, though, these are the wedges that show that a bull move has reached an unsustainable phase. So you're going to have some appreciation within this, and at some point it's going to stall. And these are the wedges that you can have very high confidence that they're going to break in the opposite direction. So in a bull trend, they're going to break to the downside, and they're going to fulfill their target, which is a full retracement of the wedge. These kind of a wedge, these type of wedges like the one we have here, just look at the inclination of resistance. I mean, it's slightly inclined. I mean, there is absolutely nothing unsustainable with producing a breakout to the upside before eventually seeing some type of a failure. Okay, so these are not the type of wedges that give you a high probability short trade. They can break in either direction. Now, that doesn't mean that they're worthless formations, because as you saw with Euronoc, if we break, or when we break to the upside, if we eventually break to the upside, that might actually point to an acceleration higher. So the breakout from the wedge is also going to be a technically important move. Okay,
Steve, excuse me, something that we both talked about that I'm monitoring is I'm looking for the final push in Microsoft.
Oh yeah,
out of this wave 4 triangle. Yeah, and if the S&Ps are not making new highs and that completes, that would be another good sign. So let's see if Microsoft can make a new high.
Here's Microsoft. As you see, it was in a wedge, although to be very fair, this is not necessarily the wedge's trend line, right? I mean, we might prove that the trend line is that. So, you have to take this trend line support with a pinch of salt.
Well, I'm looking for a new high first, is the point.
Yeah, but there is a second formation here that we have to keep an eye on.
The rectangle.
This range. Yes, this rectangle, exactly. So the good thing here is that we have two separate formations to watch for, to see what Microsoft wants to do. So yes, I agree with you. Microsoft has been leading the market higher. Actually, Microsoft is the one that
and Apple.
kept me from being in the wrong side of the market when we had that very violent correction lower back at the end of 2018. Look at the reaction that Microsoft had. This was
Nothing.
a very, yeah, I mean, it was a correction, but you could look at it and say, no, this is corrective. I mean, this doesn't look like a big reversal. I mean, this looks like a correction in the market, right? Now, having to do with Apple, since you mentioned it, first of all, I have to tell you that the big difference is compare the move Apple had with the move Microsoft had back then, right?
Yeah.
So back then, just by looking at Apple, you had absolutely no way to be confident that the move lower in the S&P and the rest of the indices wasn't impulsive. But Microsoft was a different thing, right? You see the big difference between the two types of price action here.
Yeah, I'm just talking about now. This has been a leader, and it took all this time for us to take out the highs from when was it, 2017, end of or big 2018. So back underneath it, or back under your throwover line, back inside that wedge would be pretty negative.
Oh yeah, absolutely.
So just a couple of things, but I'd love to see Microsoft make a new high with a lower high in S&Ps. That would be a market message to me.
Oh, I agree with you. I totally agree with you. And that's why Microsoft is
could happen today.
Is one of the few stocks that I'm very, very closely looking at, because I know that it was one of the few stocks that didn't, in quotes, lie during the previous correction. It actually showed the right side of the market.
Great relative strength.
Yes, yes. Now we have a friend here, and I think this is the only thing that I haven't covered, that is asking for Aussie against the CAD and Kiwi against the CAD, and we have 2 minutes, so I think this times perfectly, because I'm going to cover fast those two. And if your guest is here, you can go ahead and start the interview immediately after. So,
okay.
Aussie CAD, as you see, I do have recent drawings on my chart. So Aussie CAD, the bad news if you're bullish is that we've broken through this trend line support. Not a good thing. Now, there is two things actually going for you here if you want to look for a bullish reversal. One, that this can potentially be a descending wedge, and two, that we have RSI divergence on the daily. Does this mean that I would be buying it? No. Personally, I think that if this is to be some type of a bottom here, I think that you'd rather wait for a breakout above 91 cents. And if that happens, I think there is still going to be very decent upside to follow. So that's what I think about Aussie CAD. So basically, I would be very careful below 91 cents, but a break above 91 cents, might be a good indication that something different is brewing here in the market. More or less the same deal here with Kiwi CAD. Kiwi CAD has found support in this horizontal support area. You can see it. If I zoom out, you can see that it has importance, right? Now, is it trying to base? Is this a bearish consolidation? Whenever you ask this type of a question, you should always assume that the likeliest scenario is a continuation of the trend, which in this case would mean lower. So basically, if you want to take the other side of the market, I would at least wait for some type of a bullish development, which we haven't had yet. Anyhow, Aussie CAD looks more clean. We know that the Aussie has been overperforming the Kiwi, and not only that the Aussie is likely about to start or has already started another move higher against the Kiwi. So if you're looking to fade this market, because I know from experience that usually when people ask about something, they're looking to take the other side of what has been happening recently. That's how the human mind works mostly. I have to tell you that I would probably go with the Aussie CAD if you want to fade one of the two, in case we get a break above 91 cents. And okay, we had one more last question, which I didn't see, which is gold. Let's do that as well. And then the rest tomorrow. Of course, if you're a Forex Analytics subscriber, you have all day to ask in the
Wow,
chat.
we have someone here from Anonymous.
So gold, nothing really has changed from yesterday or the day before. I have no reason to believe that this is not a bullish consolidation, bottom line. Okay, so the 1460 low that we found at the very first day of October might have been the low, might not, we'll see. But one thing is for sure, as long as we remain within this pennant, I expect, an eventual break to the upside. So I'm bullish gold, and I think buying a breakout is probably a good idea. Now, of course, keep in mind that this consolidation might last a little bit longer. Exactly the same applies to silver. You can see silver here, not very different than gold has been. Okay, so gold and silver, this type of price action tells me that the chances are very high for a continuation higher, and that might even manifest within the next few days, right? I mean, any given day. So I still maintain a bullish bias. No questions asked about it.
Thank you, Steve.
Thank you, Coach.
Okay, Michelle. And let me just unmute you. You are unmuted, Michelle. How are you today?
Okay, make sure, Michelle, make sure, first of all, that you have selected
an audio.
Yeah, the right audio source.
Can't hear me?
Now
Oh,
we
yeah.
can.
Now
Oh,
we
okay.
can, but
Oh,
you sound a
well,
little bit
maybe-
far.
Okay, so maybe it
You
was because I
sounded-
hadn't said anything before.
You sound a little bit far away. Any chance you can increase the volume of your microphone or come closer to it?
Yeah, let me see if I can do that. Hold on 1 second here. How's that? Is that better?
Yes,
It is, Mish.
it absolutely is.
Okay,
And,
great.
and to share your screen, Mish, you just hover your mouse over the drop-down menu. You'll see the green box that says share.
Yes, I'm going to share my screen right now. You cannot share the screen while the other participant is sharing. There we
Go ahead.
Don't worry, just stop sharing.
Share, and I'm going to do screen 2. Okay. Okay, can you see that?
Perfect.
Got it.
Yeah.
Now,
Got it.
since I put on makeup this morning, should I also share?
Yeah,
the
go ahead.
makeup?
Use the webcam.
I mean, really?
Why not?
Why waste all this great makeup? All right, hold on. Let me find
Oh,
where it says.
it'll say start video.
Yeah, I got it. Okay. And is anything being seen now? It says start video.
Yeah, something is. I think something is coming through. No, it's you, Coach, right?
It's me. Yeah, your webcam. I figured if you were going to be on, Mish, but I don't think your webcam is working. It says stop video or start video, and that would start your webcam.
Yeah, it's next to the sound options. It's next to the sound options, and
Next to the
it,
microphone.
Yeah, next to it, there is also a little arrow. Perhaps if you have more than one webcams, you can choose exactly which one you want to use.
Well,
Okay.
I'm really surprised that you can't see because
Okay.
Anyway,
we're looking at looks like a famous divorce here with Matt Lauer and Ann Curry, and
oh, that's really funny. Okay.
Yeah, it's sad. You know what? It's a great segue. I was going to ask you, Mish, how you and Keith are and your family, and then I was going to ask you about your metaphoric market family, the dysfunctional family.
Yes.
And I also want to congratulate you on a great call in precious metals, including silver from your last interview. Had a dramatic move to the upside. Nice work.
Thank you very much. I'm still kind of amazed that you cannot see my video, so I don't understand why not. Let's see. Hi, well, whatever. We won't obsess on that. Okay.
Okay.
All right. So, yeah. So first of all, to answer your question, Keith and I are doing great. Thank you very much. We're doing a
Good.
lot better than Matt Lauer, that's for sure. No women coming out of the woodwork.
Yeah. Yeah. So anyway,
And
uh,
as far as the Modern Family, let's go right to it. Actually, we'll get going right from the beginning.
okay.
Oh man, hold on. Sorry, I gotta go back to it here. Okay. So here it is. These are all I like to show the weekly charts, because the perspective is usually better. We all get caught up in the moment on the day. And what's so interesting about the whole macro picture of the market right now is that on the weekly basis, and I'm talking about all the indices, not just the Russell 2000, the momentum has waned. So even as we've been rallying over the last couple of days, that momentum on the weekly basis has waned, even though it's still positive on the daily. So now you're in a situation here, it's really critical. As we're heading back now to the top of the trading range in the SPY, we certainly are nowhere near the top of the trading range in any of what you're looking at right here in
Good
what
point.
we call the economic modern family. So one of two things has to happen. In order for that weekly momentum on the four indices to go positive, we need to see these sectors that you're looking at that we'll go through in a moment catch up. And when that happens, what we probably will occur is we'll get some kind of a blow off rally because some of the inherent issues in the market haven't gone away. So this has really been pumped up, as we know, on prospects that we will have a deal with China. Well, do we really have a deal with China? We don't know. Brexit, okay, I think that's a temporary situation here. It's just some kind of gleeful move, and it's been actually negative for the dollar so far. Three, we still have the whole Syria situation, and history proves that that just doesn't get swept under the rug. Most countries besides this country think much longer term. We tend to be very ADD in this country. We think 5 minutes out. And particularly
Immediate gratification.
exactly. And you get countries like China, India, or some of the countries in the Middle East. They're very long-term thinking. And so, whatever's happening with the United States right now, we have to wonder how much relationship have we broken, and what are they doing? What are these other countries doing to sort of work around the United States? I mean, we sort of had this feeling in this country of infallibility, but again, history proves that everything is cyclical. So with that backdrop, we have to put that on the shelf and just look at the technicals right now. And I think the picture is very clear. So what you're seeing here, getting back to the chart, is that the first chart here on a weekly basis, this is the Russell 2000. And as you know, even though we can see NASDAQ and SPY go up, yesterday we saw semiconductors go to new all-time highs, which, by the way, is part of the family. Unless we get the manufacturing sector, which is what IWM represents, it's the 2,000 small caps all in the United States. If this doesn't play some serious catch up, then to me this rally is just nothing more than a great opportunity for the day traders, for the quick overnight moves, and then for the longer swing traders, an opportunity to sell into it. And so what would have to happen here is you see this blue line. That's the 50-week moving average. Now, we've been up and down this 50-week moving average in IWM for quite some time. You can see going back to the beginning of 2019, when we had a huge dump in December of 2018. We came all the way back. We pierced it a few times, but we've not been able to sustain. And you can see really from the slope of the 50-week moving average that the slope has been either down or neutral. So this momentum, really, you can see it so clearly here that even on this rally, the momentum is not convincing, number one. And number two is a rally to what? Whereas SPY is trying to get to the top of its recent trading range, and it hasn't been able to pierce 300 today. We'll see if it happens today. If it doesn't, I would not think that's a good sign. This still has to go all the way up and has been in this range now between like 156 and 145. About $11 range. The S&Ps, the SPY has been in about $20 range. These are huge ranges that when they get to the top of, everybody gets super bullish, and then some tweet comes out and sells off. When it gets down to the bottom, everybody gets super bearish, and then some tweet comes out and it rallies. So a range, that's what this is until that changes. Number one, and number two is even if this busts out today, and even if it closes above it this week, which would be basically over 151, which right now, considering it's 152.18 pre-market, we have to see if it's sustained. So I would say I'm certainly not bearish, and I haven't been bearish because you can see the support levels have held. But I can't get screaming bullish at this point until we see cooperation here. And that leads me to the next. Well, let's go over to down here because this is huge. This is gray in detail, right? And this is brick and mortar. So yesterday we had those dismal retail sales numbers, but this and the market rally because it was sort of the bad news. Good news is, oh yeah, the Fed's going lower. And
Mitch,
that's
your voice, some of the attendees are saying they can't hear you. It kind of like moves in and out from strong and clear to how it was in the beginning.
all right. How
There.
is this better?
Yeah. Stay
Okay.
there. Yeah,
Okay.
stay there.
I just made it louder again. Okay.
Okay.
I apologize to the.
That's okay.
Yeah. Okay.
Right.
So anyway, so I'm actually news is just I just got distracted here because Kudlow just said that what did Kudlow just say? Phase 1 of the U.S.-China trade deal includes the lowering of non-tariff barriers on agriculture, not just purchases. So, you know, is this real? I mean, you know, we've all seen these headlines in the market, and we'll see how much pump it gets out of that. Anyways,
Right. Yeah. Well, you know, when it comes to Kudlow, I interviewed him during the campaign in 2016, and I asked him if he thought Donald Trump had a chance to win the nomination. And he said no, and I don't like a lot of his policies, and here he is.
well, you know, right. I mean, right now, I certainly don't want to get into any political.
No, I'm just saying that, you know, Kudlow, that, you know, I mean,
Well, they're all getting very, very rich. I mean, the bottom line is, this is the bottom line, is that Trump's real base is not what the media likes to portray as the blue collar. I mean, that is a base, but his real base is the big, big money. And why not? They're making so much money. We not only have they, you know, seems like some insider info, which by the way, as you know, in the legislature, they can get insider information and it's not illegal.
losing you again.
Oh, okay. I don't know why.
It's when you move. I think it's when you move, when you're talking, and then you come back towards your workstation and it comes in. You're using an internal mic would be my guess.
Actually, I'm using the speakers. I usually
Oh,
have an
oh,
internal. Okay,
okay.
I'll face the mic. So
Okay.
but this is important because this is really part of what people have to understand is right now the biggest money is making even more money. And why not? We have historical low rates throughout the world. United States still is the only country in the world that actually has a positive interest rate, but with pressure for it to go down. We have tax rates for corporations really cheap. And so for them, this is a party. They're having a party. And so rather than judge it, if you were traders, we just have to follow the money. I mean, that's
Exactly
essentially what our job is. Now, of course, I always like to think 3 steps ahead and try to figure out what is really going to be the fallout and position for that. And that's getting back to the Modern Family, we will, but that's where we're going to go back to commodities. So let me just finish this conversation.
Okay.
And then we can go back into commodities because, you know, I have not changed my mind other than a couple of sectors that have been so beaten up that I think still have tremendous potential. Like, for example, the cannabis space, which right now is pre-market also up tremendously, over 4%, let's say, in Canopy growth. Kronos is up. MJ, the ETF is up. 3D printing, another space that has been so beaten up, but I think still it has a great future. Other than that, I still think your best bets really, other than, some quick trading here, is going to be in these commodities. So we'll get back to that. So
Okay, Michelle.
let's go to XRT. So this is what you see here is XRT. Yesterday we had those dismal retail sales. Market went up regardless because of the anticipation that with bad news, the Fed will be incentivized to actually lower the rates. Well, you see here that this is below the 50 and the 200 week moving averages. So
Yeah.
this has to work. This has to work a little bit harder. It really has to clear 44 and stay there, and then we can start to say maybe these are some bottoms down here.
Yeah.
But until that happens, you're only anticipating that it's going to hold up. And from a seasonal standpoint, we still have the biggest consumer season coming up, which is the Thanksgiving season. So we really won't know consumer sentiment, I think, for another month.
Yeah, so I guess the big question on the narrative is, can manufacturing weakness bleed into consumer confidence?
It already has, according to the statistics yesterday.
Right.
The thing is that everybody's fickle these days. The public is fickle. The markets are fickle, and so the question is going to be: was it a fear because it looked like we were making no progress? If progress is made, let's face it, who feels the pinch of the tariffs? Consumers. That's who's really going to pay the cost. And we've seen rising prices already. Healthcare alone, which has nothing to do with the tariffs, but I'm just picking that out, has risen by 30-40%. That's huge. And now food prices have gone up, even though we don't see it reflected in the inflation numbers. And if the dollar continues its decline, well, that's going to be another reason why consumers will have to worry, because their dollar will buy less, and they won't have any money. People don't save anyway. I mean, that's a big fallacy that people save, but in their debt, it just doesn't give people any reason to want to save money if they don't get any interest for their money and their dollar is not worth as much. That's another bubble that people are watching for. Okay, so let's move over here. This is semiconductors right here. Now you can see the difference between this and everybody else.
Yeah.
Semiconductors, of course, technology is where all the money is flowing. And I think it's a very, very important sector to watch, because not only obviously when the market looked like it wasn't going to fall apart, was it the place to go to buy for a shorter term type swing trade. But if we really are going to see an impact in consumer confidence, what's the first thing people do? They stop upgrading their gadgets. That's what they do. And so if you start to see semiconductors really fail, and we're so far from that, but this is just sort of a heads up, that would really tell you that people are starting to feel the pinch in terms of the economy and flat wages and rising prices, etc. These are the people who aren't making money necessarily in the stock market. This is, the everyday people.
Okay.
But this is also a really big sector right here. This is transportation. And transportation started also kind of similar to IYT, although with a little bit more teeth to it. This too has been in a range, really basically between 175 and 190. And so right now, again, this is back over the 50-week. You can see the slope is neutralized a little bit. So this is going to be another big key to watch, because if the transportation, which now we're starting in the earnings, like CSX reported yesterday, and I just switch the screen here, let's take a look at CSX for a second. Where it was really big up last night, it was up at around 71.85.
Yeah.
It's not that impressive. Look, it still has a lot of work.
Volume.
It still has a lot of work it has to do. Sorry, I moved away from this.
Yeah. Okay.
All right.
So it looks to me what your family is demonstrating is that it's mainly the semis holding up the whole market.
Yes, you're absolutely right. That is exactly.
Boy, that's precarious, isn't it?
It's very precarious because, like I said, if you really want to see what consumer sentiment is, I mean, obviously we already know that brick and mortar has been in trouble. E-commerce has done better. People are in huge amount of debt, but they're still buying Apple products. They're still upgrading their gadgets. They're still looking at technology. So once that wanes, I think that's when we really know that maybe we're at a top. But until that happens, I wouldn't be thinking the top unless something dramatic happens either in the Russell 2000 to the downside or the transportation to the downside. And then let's look at these like in between, why they made the family. One is regional banks. So regional banks, as you know, is interest rate sensitive.
Right.
And so at this point, this too, now look how close together you have the 50 and the 200 weeks moving averages. It pierced it yesterday. So we'll see what happens here. But this too has been in a range. All of these things have been in a range, nothing like the way the SPY has, because its range is near all-time highs. This
Right.
is sort of smack dab in the middle and not too far from the recent lows. The next one here is biotechnology. Now, biotechnology is important. I mean,
Yeah.
yes, it definitely got hit with the opioid crisis, but nonetheless, it's a highly speculative area. And also, a lot of money
That
has.
opioid crisis is starting to give me a headache.
Well, I've got just the drug for you.
Anyway, so Michelle, yeah, biotech, and normally in bull markets, biotechs smoke. You know, I mean, they're kind of, I remember them being leadership rather
Yes.
than laggardship.
Well, you know what's interesting about the biotech is if you look back and if we take this chart and bring it out and scrunch it up and go back in time a little bit here.
Yeah,
This thing peaked out
yeah,
that in 2015.
yeah.
So
Okay.
even when everything was making new highs in 2016, 2017, 2018, this thing
Right
couldn't
point.
even get to its 2015 high. Now, it has been a little bit of a political football, but this also is representative of how people are still not fully convinced in the market. That could be interpreted both ways. That
Yeah,
can be interpreted as a positive or as a negative.
yeah,
But the point is if we go back and look at the whole Modern Family again, you can really see the whole picture here, is that inside the market is still so weak comparative to the S&P. And so let's take a look at the S&P here, which first of all, as I said, has to clear 300. Here's the weekly chart. So let's take a look at the weekly chart. And, you know, our high here has been 302, figure 302, 303. So we'll see. I mean, we'll see if this carries on. Really, again, we just absolutely have to watch what happens here. Look at the difference in the picture between the Russells and the SPY.
yeah.
This is in a wedge and not even over both major moving averages. It looks like it's going to try for it early this morning. The question is going to be, can it sustain? So that to me is the whole key right there.
You know, Michelle, you know, I think, and a lot of people don't want to even talk about it because everyone says, oh, you know, I don't want to get political. And I understand it. It's torn friends apart. It's torn families apart. But, you know, there is another market factor that no one's talking about because the market's ignored it. There are historical precedents for the market to come under pressure during impeachments. It came under pressure under Clinton, came under, the market lost 30% with the Nixon impeachment. And so far, everyone is just discounting it because even if he's impeached, he won't be convicted in the Senate. But that might shift. And a lot of people are saying on CNBC, they had Cooperman on, if Trump doesn't get reelected, and then I think Mark Mobius said the same, that the market could fall 25, 30%. Well, what if his presidency is being threatened? Why can't the market sell off on that if the market's giving all the credit of this advance with the tax cut, deregulation, Fed, whatever? Why can't the market break when the impeachment begins to look like it's a possibility instead of just being a partisan effort in the House?
You know, well, first of all, I really do not believe that he's going to be impeached.
Okay.
No, and this is just strictly from analysis. This has nothing to do whether I love
Right.
the man or hate the man. This
Right.
is just from what I see. As I said to you earlier, as long as the stock market stays up and the unemployment numbers stay down, and we don't really see any, you know, overt signs of recession. Today, industrial production fell. Yesterday, we saw the retail sales fall. Although the home builders have gone up, I don't necessarily consider that a lead. I almost look at that as a lag, because as we know from past experience 10 years ago, you could have home builders building like crazy, like they did in 2007. And then in 2008, they all went bankrupt when nobody was buying those houses. So I don't consider that, I think that's symptomatic of a euphoria that people think, and I don't see that going away. And so that's, unless we crash the market before the elections, or we go to war, although even that makes it dicey, because in a wartime, a president has the opportunity to basically even delay an election, and I don't think that he would be impeached during.
Uh-oh.
Yeah, I don't think he would be impeached during a wartime. So basically, I would not even take that out of your head. This is why I love charts. Now, there are other things that are happening in the market and other markets that are.
You know what? You're a pro. I just came to me, and I don't script these, Michelle. What's happening in the repo and Fed funds market? What are your thoughts about that?
Well, this is exactly what I think, that this has sort of been the quiet QE, that they don't want to call you QE. But, basically what came out today is China has really basically reduced almost to stop buying our treasuries. That's a problem. So if our big plan to save the economy from any kind of a slowdown is to get the rates down, that's a temporary band-aid. And this is where I'm heading. If you look now, you see I have a silver chart. You know that right now, I think, and I've been thinking this for months, is that we have another situation emerging that can make a tremendous amount of money if you're investing, but also really hurt people who aren't investing, and that's inflation. The risk to inflation is to the upside, not to the downside. Everything I see that says we're heading deflation, I just throw that out, because essentially what you're seeing here is two things. Number one is the silver gold ratio flipped. Is it screaming? No. But today it could start to turn back up again. It went up to resistance and it's turning back down. If silver starts to outperform gold on any, longer term basis other than for a few days, inflationary. If the miners catch up and outperform gold, inflationary. Believe it or not, looking at the agriculturals, yes, of course, here's DBA. We have the notion of China buying, but we also had tremendous weather problems. And these two could be, looking at inflationary. And believe it or not, right now soybeans, we don't know because it's being bid 15.75 and 16.10. This is the actual ETF. But if we take a look at sugar, I have a theory about sugar. So sugar actually made new historical lows, like lowest it's ever been, was just here in September. And that is, how much lower is going to go? Now, the reason why it's a good inflationary indicator is back in 1974, sugar traded up to 66 cents. It was a little ahead of everything else when inflation really hit the fan.
These aren't all historic lows. We've been under 10 cents before, haven't we?
Well, when I go back
long time ago.
Yeah, probably before my charts will even register.
Yeah, okay.
Here's my monthly chart that goes.
Okay, going back to 92. Okay.
Right. Yeah, in 92 we were at 10. Right.
God, so old.
No.
Right, go ahead.
Well, anyway, I think it's really important to watch sugar, because what's happening with sugar right now is we did bounce off the lows. We're still very much under pressure, but interestingly enough, it's kind of like a secret inflationary indicator. Sorry about that. It's a secret inflation indicator because of the fact that what happens during inflationary times, and this is kind of how I feel about pot too, cannabis, is that people go to comfort. They want comfort. So during the Depression, alcohol, once the prohibition was lifted, went crazy. Now, cannabis is like the new alcohol, but people consume a lot of sugar, and particularly lower socioeconomic groups, and they tend to actually consume a lot more sugar now during bad times. So that means that this is a really interesting way to see what demand is looking like for sugar going forward. And if this actually starts to clear, looking at the weekly, that
Yeah.
goes 14 cents. I think that would tell you something. And so we've already got the silver gold.
Great look.
We got the silver gold. You're going to look at the miners, and you're going to also look at the sugar and the dollar, obviously, which right now, if we, since the market just opened, let's see where UUP is. It broke down under the 50-day moving average yesterday.
Yeah.
Now you can see it's getting some follow through. However, on the weekly chart, it still has a long way to go before it's an actual breakdown. This
Yeah.
dotted here is the exponential moving average, the 17-week. We'll see if we catch some support here, but if we don't, that, and along with, let's see what the interest rates are doing this morning. Okay, so they're back down a little bit, but I wouldn't take this so heavy. The yield curve, by the way, which was inverted, has now flipped back the other way.
Steepening. Yeah.
But you can see right now that the TLTs are down. But again, let's take a look at the weekly chart. There's always a bigger perspective, and that too is sitting on support. So I think we're in a very interesting situation. And now that the market is open,
Yeah.
you can see that SPY
Pushing.
pushing to try to get through that 300 level. Let's see where IWM is. IWM is, look, just sitting there on the 200.
Weak bounce. Yeah.
YT, since we said that was important, the transportation is here. Let's see what kind of follow through that gets. It's because it's right into some resistance here as it gets closer to 190. XRT, the retail. Look at that, trying hard to pierce, but look, still has a lot of resistance here on the weekly chart. And let's see where semis opened, of course, probably up at new highs again, right? Yeah. Oh, no, not quite. Pretty much. Yeah.
Dogging it a little. Yeah.
Yeah, not quite. So yeah, it's the high from 2 days ago. And let's just take a look here at gold now that just opened, which is still, I mean, it's holding.
Yeah.
And people go, oh, gold's going down. I'm like, why would anybody think that? There's just too much uncertainty in the world. On the weekly chart, all we see now is a move down to support, and it's holding. On the monthly chart, this cyan line here, this is an 80-month moving average. And after years, and I say years, since 2013, it trading below it, this is took it out. So we are actually in an uptrend in gold and in silver. Let's take a look at the silver chart here now that this opened. Look at silver trying to get back over that 10-day moving average. That's the cyan line. Here is the 10-day moving average. This is what I'm talking about, underperforming gold. This actually tried to take out the 80 monthly and is now back below it. So these are all things to watch. And I believe an unbelievable opportunity to make money if you're into having more of a longer term type investment.
That was a great interview, Michelle. You covered everything, really put together the whole jigsaw puzzle for us. What's the best way for people to get in touch with you, follow you? If you want to show your website now, that would be fine.
Oh, okay. Let's do that. Hold on. Let me get into Market Gauge here.
And you could follow Michelle on Twitter at Market Minute. That's her Twitter handle.
Yes. Okay, I'm moving over here. This is our website, marketgauge.com, and my daily blog, which I usually post on Twitter as well, is always on the site, as well as Keith does a weekly commentary with a video. You know, we have a lot of great content here, a lot of tools that you can look at for free. Some, of course, are more premium, but you know, you can see here that we have a thing called Big View that gives you all of the different looks and ratios. You can see here, gives you the weekly view. If you want to take a look at the internals, some of this stuff you can look at for free like this. You can see what's happening here with the up-down ratio, the McClellan, the advanced decline, et cetera, et cetera. So have a look around the website, and if you ever have any questions, of course, as Dale just said, at Market Minute is my Twitter handle. I'm on it religiously, and so you can usually find me there and ask me some questions.
Okay, and Forex Gal says, I see she uses floor trader pivots, and that's because that's where Michelle cut her teeth, on the COMEX floor. and people are thanking you, Michelle.
Oh,
So,
thank you.
yeah, so great presentation. And I hope that your trading is as sweet as sugar on a breakout. And I really think that you've edified our community. You've given a great presentation on almost every asset class. And I wish you nothing but good things, Michelle, my trading warrior sister.
Oh, thank you, Dale, and same to you. I'm so proud of you. You've overcome a lot of obstacles, and you show up to the party every day. Good for you.
Yeah, you know, that Chicago spirit. So thank you so much, Michelle. Let's get back together in another couple months because I'd like to have you as a semi-regular because the content that you provide, I think, helps anyone who listens and watches. So thank you again for your time.
Oh, thank you, Dale. It would be my pleasure to come as often as you'd like.
All right. So that's a wrap for us, everyone. Michelle Schneider, I told you. You were going to get the whole picture. I bet there'll be some people looking at sugar charts tonight. And remember, don't just count your pips or sugar cubes, count your blessings, and we'll see you tomorrow. Adios.
Adios.
See you, Michelle.